Okay, hello everyone. Just wanted to make a quick weekend summary here. I'm done from my stock work, and the story hasn't changed. It's been really difficult to find entries with low risk. It's been a rally driven by big cap stocks, the Microsofts of the world, and then a handful of high PE growth stocks. So it's been extremely difficult to navigate this rally and stay disciplined. FOMO is probably running rampant with new traders, but what I wanted to do is go through my thoughts, few stocks that I'll be watching. Nothing very crisp. So what I'm going to do is look at few stocks that are extended, and then look at some that potentially need few more days, and then some potentially that you could watch very closely heading into next week. So let's dive in, and then we'll go from there. Again, just a reminder, this is do your own homework, your own due diligence. This is not a recommendation to buy, hold any securities you see today. So with that, let's jump in. I think what I wanted to start with is really just a bird's eye view of the health of the market. Running off the bottom, like I said, both on the S&P 500 and the NASDAQ 100, and then SPY and QQQ. You see the stocks making new 50-week lows are expanding while we're rallying up. This has been really interesting market. This has been kind of the case for months and months now, where the market and the index is being held up by these big cap stocks, the Microsofts of the world. What do? You just need to stay disciplined and look for entries, where low risk entries when you find them. But this is hard to navigate. So you got expanding on the NASDAQ. The top here is NASDAQ. You got the expansion on the NYSE and then all US. Here you got the green. This is the NASDAQ 100. This is the SPY, and then this is the Russell. So you see the Russell continue to lag compared to the QQs and the SPY. Okay, so that's the story there. Let's go to our stocks above their moving average. Last week I did talk about potentially head and shoulder bottom here, still in play. A little bounce here for the IWM, so potentially we could continue to unfold that way, and then have the Russell 2000 catch up with the rest of the indexes that we have. Good news is that we're bouncing here. Stocks above their 20 MA are stopped going down, bounced with Friday's bounce. So we'll see if we can hold in this area and then build up this right side and then get some traction. I think that's when you're going to start seeing improvement in your portfolio, if this holds and start building. So again, right, this is all left side, okay, no right side. So there's going to be plenty of time for you and me to get positioned, because this is gonna have to round. Oops, I don't know what happened there. This will have to have a lot of work to do to get this right side rounding up and building that base. And there's gonna be a lot of stocks that set up if that starts to unfold. Remember, only 37% of stocks are above their 50 moving average. Only 28% of stocks are above their 200 moving average. We look for stocks in uptrend, so they are above their 200 MA and then trending up. So plenty of stocks to set up. This is not just IWM. Even if you look at the NASDAQ composite, this is making new highs, but you've got the downsloping 50 MA. This will need to round up. So I wouldn't be surprised if this pulled back to give that 50 chance to round up and then potentially break out like this. And then you will have quite a bit of stocks here set up in the next 2 to 3 weeks. Okay. Again, this is still left side. the right side just now starting to build. We haven't missed anything, folks. Just everybody relax. 40% above the 50-day MA, and then 33% above the 200 MA. So plenty of stocks still that need to set up, okay? And that will give you, oh, my mouse stopped working, here back. That will give you a way to run this site, all right? So with that out of the way, let's take a look at some stocks. I'm gonna start with the extended ones that you want to keep on your watch list. Put them in the larger watch list, and then watch for some type of pullback. You got Uber, obviously, great kind of open at the low, close at the high for earning. Broke out. I don't buy breakouts like this, so let's see if this can pull back over here, give us some type of consolidation, some type of pullback buy that we can manage risk against. You buy it here, you can, but you're on your own. That's not how I do it. NVDA, wedging up on the right side here. Let's see what this can do. Obviously, this is double bottom. Okay, this is broke out of the double bottom, classic kind of slim pattern. Let's see how this can pull back. Actually, I want to show you guys something. So remember how this looks. I think, if I'm not mistaken, if my memory is correct, there was a pullback. There was a double bottom that looks very similar to this on Netflix. Let me go there. Netflix. Oops. If I remember, I can't remember what bear market it was coming out of. Let me go back. I'm pretty sure. There we go. All right. Let me zoom in here and show you what I'll be watching for here. So this is looking very close to Google today. My memory. This is from 2010. So this is your double bottom. You saw that on Google. This is your breakout. And then you see that pullback. And then here's your entry. This is your pullback. This is your pullback buy. And then you're in on a stock that advanced multiple percentage points. So this is Google today. So no FOMO. Wait for that pullback. Nothing goes up in a straight line. So I think this was really good example for me to remember that. It's just kind of stuck in my head because this is in one of my model books that I have. I put these charts myself. This is in one of the model books, and I just remembered that looking at Google. So let's go back to Google. Oops, sorry, not Google. NVIDIA. My bad. I probably said Google multiple times. NVIDIA. So that's your double bottom. Now it's going up, and then let's see if it'll give us that pullback. All right. DKNG. Again, extended. You gotta wait for it to give you that setup. Similar stuff, right? This is the left side. You're gonna see a lot of that left side, right side. Okay, that's not how you want it. Okay, you want left side. You want left side, and then right side. Okay, that's not happening. PLTR. I tweeted about that on Friday. You know, pretty okay. Actually, probably should have taken it. I didn't. I wanted to see a little bit more pullback, having that 21 EMA catch up here. But you know, if you took this was, you know, if you'd taken it above this high, this was about, you know, 5% risk. You're not 1-1 yet, but strong move. Pull back on gentle volume. You know, I'll have a little bit more of that right side, right? So you already have a right side. It's not left and up. This was left and up, and then corrected that pretty deeply, testing the lows, and then now back up. So maybe it'll give us something here that gets you in. It's not about buying the bottom. It's about finding low risk entry. PLTR, that is PLTR. Okay. Now, this one is a bit, we're not touching that. So let's see if it give us what we're waiting for. This pullback down here and then back. Okay. So those are just really, again, put them on your list. Keep watching them. ANAT pulled back. Can you buy this here? You can. Am I buying it here? No. I want to see a little bit more. Does that mean I might miss it? Yes, and I'm okay with that. So this needs a little bit more for me to be interested. This is just still left side, needs a little bit more work, but those are the ones that you want to watch. Infa as well, I've been pointing this for a while, consolidating sideways. I'm not interested yet. I'm not ready to buy these short flags yet. I know a lot of you and other traders do. Nothing wrong with that. Just do you. No right or wrong. This is still shop. Still lots of left, not enough right. Just that's not what you want to see, right? Again, I keep doing this because that's how you're gonna get your brain to know what you're looking for. Okay, it's extremely important. So those are the ones that are out there, right? You got more. DUOL. Again, boom, an earning, right? You missed it? No, it's gonna set up. Nothing goes to the moon in a straight line. It's going to set up. You just need to wait for it to set up. Crowd, you guys know I'm in crowd. CrowdStrike. No, not viable here. So we'll see what this is going to do. And then ADBE. So tons of, like I said, tons of those growth stocks. Meta is obviously as well extended here. MSFD, crazy up. I sold it back here. You guys know I bought it here, sold it here, and now feeling like I'm not that smart. All right. So these are the ones that are extended. How about the ones that you can? Well, it's still weighing in that kind of fast food restaurant stuff. Really nice space. I like it. Let's hope this sets up. Volume drying up, extreme volume dry up down here. Not bad. So let's see if this can start building here. Then you got in the same industry, you got CMG. It's just unbelievable. After earning, you slam it here, and then you just run it back up here. So we'll close the gap now. You don't want to be buying this, obviously. So let's see if it can continue to build this right side. Okay. So lots of merchandise to watch. Not get into right now. These are extended, but this good sign. Lots of potential pullback setup coming in the next few weeks. You just need to keep an eye on them. Some that are almost there. PDD is one that I continue to watch. Extreme. So now we're not talking about extended anymore. We're talking about things that are almost there. Potentially maybe this week. You got extreme volume dry up. The only problem is with earning coming up soon. But this is just kind of sat there. Really, underperforming now. You see how this is turning red. Whoops, sorry about that. So it was outperforming the market for many weeks, and now it's underperforming. Here's your bottom on the market, and then it kind of, now it's kind of running out of steam. Maybe I'm not sure, but this is just put in a kind of flat consolidation here. So we'll see how this is set up, but this is one that's not extended. Earning come in. Ali, I missed this one here because the market wasn't doing very well. I didn't like, whoops, I'm gonna bring the right tool. I didn't like these trying to come out of here. Lots of kind of shadows. So now it's coming back, making that test, good solid bounce off of the 50. I mean, tagged it to the T. I want it to quiet down a little bit here. Just maybe give me a couple of days. Give me that pivot on support. That would be nice. So I'll be watching this closely this week. I think it's close to set up if it can hold in this area. And then Dash is another one that is, pulled back more than the others. needs a little bit more time over here. A little bit of a, not what I want to see here. But let's see how this is set up, but not as extended as the others. And then BRZE, potentially one that you want to keep an eye on. You have this downtrending line. Maybe this comes up here, pauses for a day or two, and then comes out. Potentially be a good one to watch. Volume drying up here, I like that a lot. You see this volume pattern is really nice. So let's see if this can set up early next week. Ones that are a little bit more closer to set up than potentially actionable early next week. You get KTOS, Kratos. It's in the defense sector. You guys know I'm in AVAV. I think it's the same industry. I'm in here from here. I would love for this to kind of gently pull back here and then come out, but we'll see what happens. So let's go back to KTOS. This is setting up. This is your earning here. Volume drying up. Sitting right at the 21 EMA. Low risk entry. You got your previous high here, kind of holding above that level, consolidating, absorbing that whatever selling is going on here, because obviously there is some selling. You got the shadows, earning volatility, large candle, rush candle, and now you're tightening up. So not extended and low risk entry. So if you take this, above here, what would be your stop? Your stop would be below here, so 3.8%, right? Not a big deal. That's what we're looking for. We're looking for low risk entries. Okay, so this one potentially for next week, early next week. AGI in gold, I like this one, has good numbers. So this is potentially a really nice base. I mean, you see the advance here. That's what you'd like to see. That's very classic. You have the run up. Everything is getting into stage 2 uptrend. And now you're building that right side of the base. Okay. Notice the difference between the previous rally attempts that failed and now, right? So you're building the right side of the left side of your base, right? This is the left side. Got a steep drop, try to rally back up. Just no waving, no base building, right? All left, right. That's what I showed you, a lot of the setups that I showed you today. So look at that. Right? Let me show you guys this. I mean, I don't think anyone on YouTube teaches this. So that looks a lot like not as, I mean, we have a lot of things right now that are going like this, right? So prone to failure. Did this and then back up, almost V. So what happened to this one, right? It failed. So failed, down, up, failed, up, failed, up, failed, up, and now it's going sideways. That's what you want to see. Okay, so now this is a big base in the gold, and then maybe this has something to offer here. Low risk entry. So I like this one. What else? ATV? No, ATV? No. Well, I can't remember what that ticker was. ATV. Nope. Sorry, guys. Let's take a look at Melly. Melly ran up, holding. I would love to see this consolidate over here a little bit more and then go up from there. MDB, potentially early next week. It's just not the best setup, but you got the confluence here with the downtrending and then this sideway, 3-day inside of this big range mini coil, right? So 1, 2, 3 bars inside of 1 bar. So potentially maybe something there, but maybe run up here, and then you just give a better entry here before you break out, and then you get in here. As I always say, you don't want to buy the lowest price. You want to buy the low risk price. So I mean, you want to buy this coming out Monday, sure. I mean, I don't think it's that bad. Let's see what that see what that is from a risk perspective. You get your 5%, or you can buy it above the high of the mini coil. So build in that right side. Like I said, these are not extended. You can maybe nibble on this one if you want to. I'm not sure. Let's see what else. Yelp. Yelp is one. Let me delete those. It's some old stuff. Yeah. So build in this right side. You got the move up, and then build in that base. So looks okay. Looks good. Not extended. Potentially something you can take big action on. And then URN, this URNM uranium ETF kind of caught my attention. There's quite a bit of distribution here. How do we look on the weekly? Weekly looks, I mean, you see the tails here, right? So you see this is the tail. That's the selling that you were seeing on the daily, showing with tails on the weekly. So I don't know. I mean, it's holding again. That's your strong uptrend, and then your base building, right? So I'm watching this. Can keep an eye on it to see how it acts, because I think potentially impacts CJJ that I'm in, CCJ that I'm in from here. Did okay on Monday. So we'll see what that does. So lots of tickers. Watch this video again. I'm not here to tell you where to buy and when to buy. I'm here to try to help you see how stocks move. I think that is the most important thing in trading. If you trade stocks and you do not know how stocks move, you need to stop trading until you know how stocks move, because the way they go up and down is really the way it has been happening for years and years and years, and it won't change, because it's reflection of supply and demand. It's reflection of human emotion. So understand that piece, and then I think your selection, your ability to stock and get into potentially good stocks with low risk entry will improve dramatically. So know how stocks move, extremely important. Write it down. So anyway, I think I'm gonna end it here. Tons of tickers. I don't even know. I threw it at you 20. But those are things to put on your larger watch list. Those are, you guys probably think, what, 20 stocks? What am I going to do with all these 20 stocks? It took hours and hours to go after 9,000 stocks and filter it down to a handful of high quality stocks. So this doesn't sound a lot of work, but it's a lot of work. And I'm sharing it with you guys here to learn, so that you can look at stuff that's in your watch list and compare it to what I have in my larger watch list. And if your style is the same, obviously, if you're the one like to buy bottoms, those are not going to be on your list. So anyway, I'll leave you with this. Have a good rest of your Sunday, and good luck everyone next week. Thank you.